Hey guys, hope everything's going well. You guys know that drill. Smash that like button, subscribe if you haven't, comment down below. Alrighty, if you want to connect with me, follow me on AI8 Sports on my IG. Now, it is a sports card channel, but feel free to message. I don't know if I could have an answer. I cannot discuss investments, etc. I can't tell you what to invest in, basically. Always do your due diligence. And over here, this is just me speaking my mind. So, a few things. Federal Reserve raised interest rates 75 basis points, the Fed funds rate. This was supposed to be expected. They thought that, hey, some traders thought maybe they may raise it 100 basis points, but no. So, they raised it 75 basis points. Now, here's the thing. Fed funds rate is 3.25. Not many people look at this. They look at the 2 and the 10s, which is pretty inverted right now. I think since Paul Volcker, from what I've been looking at, way back when, before I was born. Now you have Fed funds rate, what, 3.25? The 10 years, what, 3.5%. I expect bonds to rally. I've been saying this for a while. The reason why I expect bonds to rally, and I noticed like the TLT rallied today, which I have a few options positions. The reason why I believe bonds are going to rally is, once again, that soft landing, the reversal of these interest rates. Now, they may not start cutting rates tomorrow, but that will probably be the foregone conclusion, or that will happen in my opinion. The reason why that will happen is now you're starting to see the impacts, major impacts of these rate hikes. People have to pay more in, obviously, credit card debt. They have to pay more for their adjustable rate mortgages. They have to, some of the debt market has been impacted. Some people have been laid off. So it's a point of chicken for the Federal Reserve. When will they reverse course? I believe pretty soon, right? Oil is what, $83 a barrel. And despite geopolitical tension, it's at $83 a barrel. So that's actually good news for now. I believe that if you wanted to get this inflation genie, if you wanted to get rid of it, if you want to get rid of inflation, it would have to come down to geopolitical events improving. You do that, oil prices collapse or go down significantly. Other inflation goes down, markets soar because the Fed is then going to cut rates to pump up the market. Now, I look at collectibles, I look at the precious metals market, and if the 10-year yield rallies, right, which I expect it to, then the 10-year tips will go from what, positive, I think it's over 100 basis points, to back to negative yields. It's not negative rates looking at it from where it is today. It's going out in the future, and you have that precious metals will benefit, collectibles will benefit, etc. And that's all basing on the 10-year yield. You start to see rallies in that. And also that should help housing as well. People will get back into buying homes or feel more comfortable. Now, mortgage rate has spiked. The cost of borrowing is ridiculous, and you're in a time where housing prices are still relatively expensive, in my opinion. So, just a few takeaways from this. I do expect the pivot to happen very shortly, and then as well as that should help equities, that should help precious metals, collectibles, the whole 9 yards, crypto. But it all depends on the Federal Reserve. Not Federal Reserve, it all depends on the 10-year yield. And I think that is in store for rally. And that's going to help the FANG stocks, in my opinion. But anyways, guys, let me know what you think. Remember to smash that like button, subscribe if you haven't, comment down below, guys. Thank you. Bye.